Hello guys, let me know if you guys can hear me and if you can see my cursor on the screen right now. You guys see my cursor on the screen? You guys can see the cursor now, this little bluish ball. Give me one more. Okay, cool. Thank you. Just want to make sure because sometimes Discord's weird when I utilize presentations, PowerPoint slides in the live channel. Okay. So before getting into it, right, I hope all are well. We had a lot this morning specifically that I want to dive into that I deem beneficial, valuable for review. You want to be reviewing your charts every day. You want to be reviewing your trade setups that you take every day technically, and you also want to be reviewing yourself every day, right? Did you fall back into those bad habits? Did you do well and resist those bad habits or replace them with good habits, right? Did you prevent yourself from going on tilt? Did you over leverage, even if that over leveraging trade was a winner? You have to be objective. You have to be honest with yourself and review all those things, not just the technicals, right? You have to review your performance as a trader as well, because all in all, we're just decision makers. Of course, we want to make decisions based on sound logic, based off of the concepts that we discuss here, that ICT discuss, that Joe Schmo, whoever you listen to in terms of trading advice and technical advice. We have to be able to control ourselves as well, because at the end of the day, if every time we take a loss we go on tilt, then it doesn't matter if we're trading ICT, if we think we can see algorithmic signatures, or if we think it's buying and selling pressure. Okay, we still have to be able to control ourselves properly, responsibly after a winning trade and after a losing trade. Okay, so I know that's not what people want to hear right now. It's the boring part, but that's the most important thing, right? Don't overtrade, don't over leverage. That comes before all of the things that we're about to discuss. Okay, now that that is out of the way, I am very excited to get into some of this price action because it was absolutely beautiful. Okay, some of my executions are on Twitter. We're going to walk through specifically the 8:30 news event today and the recovery that took place to London High, utilizing many of the concepts that we discuss here, many of the signatures that we discuss here. Okay. And one last thing before we get into it, or two last things. One, this will be recorded. Okay, so I will send this recording in the review channel after the call is concluded. And two, if you're still struggling, if you're early on in your trading / ICT understanding or journey, right, there's going to be a lot of things here that might seem overwhelming. It might seem unnecessary. And on that point, not every single one of these signatures is necessary to be a profitable trader, to be consistent in these markets, to internalize order flow in a way that makes sense to you. Okay. The way I kind of want to teach these, not only in this presentation, but you guys know if you've came across me on YouTube, on Twitter, whatever, somehow just found the Discord and have joined live calls in the past. Okay. If we're trying to trade like the algorithm, I want to know as many of these algorithmic signatures as possible. Okay. That doesn't mean as soon as I discover one, or as soon as ICT says one, that doesn't just mean that I try to trade it full leverage the next day, right? I know that it's going to take some time for me to get used to, specifically as I'm watching candles live, okay, before I really implement it in my trading. All the signatures aren't, I'll call, entry methods for me, okay? A few of them have grown into that, and that's the beauty of trading, of understanding ICT concepts, okay? A while ago, I never executed off of order blocks. Now my last few trades, order blocks have played a huge part in these setups, in my narrative. Okay, so again, just before we get into technicals, I want to record this as I do with other calls, but specifically this one, if it's not making sense, just go back and watch it, and also go on your charts as well and compare and really prove to yourself that you're seeing what I'm about to discuss here. Okay, at any point, feel free to send questions in the chat. I'll try to get back to them. If I'm speaking on price or kind of just, I'll call it in flow state. I'm not ignoring your chat. I'm just trying to stay focused and say what I want to say. Okay, but if I do miss it at the end of the call, I'll run through the chat and make sure that I get all of your questions. Okay, so the first half of this presentation, tonight's review, will be with the entirety of the server, and then the second half for the RTO guys, we're going to break off and we're going to do kind of a live workshop, live Q&A. We're going to go through S&P, NASDAQ, dollar, golds, Bitcoin, Solana, oil. What else are we missing that we usually watch? I think I said dollar. Silver for Ross. I don't know if Ross is here. He's the only one that trades silver, I think. And here tonight, we're just going to look at NASDAQ. Okay, but everything's applicable to ES. I specifically traded NASDAQ. Okay, so we're going to review that here. Okay, all of that out of the way. I'm excited to share this, and let's get into it. Okay, so for this chart and all of the charts for the rest of the presentation, you'll be looking at a 1 minute time frame. Okay, that is where about 99% of my executions take place. If I'm really feeling, I'll call it aggressive or confident in a bias, but it doesn't yield as much in terms of points, or I'm expecting very fast delivery, sometimes I will, and overemphasis right there on the sometimes, very rarely, I will drop down into 30 seconds. Once I discovered I could use a 30-second chart, as most traders do, as most people do, we get a little overexcited because we see other people utilizing those lower time frames, and it looks great online on social media. It looks easy, but then we learn the hard way that we need to stick to what we're comfortable with. And that for me, over time, through my learning, through my trading, has been the 1 minute chart. I have a lot of traders in this entirety of the server and with RTO that are killing it using a 5 minute chart, that kill it using a 2 minute chart, that kill it using 15-minute analysis or levels, right? I don't typically use 15-minute, I'll call it key reference points. As you guys know, with key reference points in general, or the KRP macro model, we typically look at KRPs on the hourly time frame and higher, so 4-hour, daily, weekly, and a monthly. But some people, right, they've put in their twist on it. They found a way that makes sense to them. They're comfortable with utilizing 15-minute levels to frame a trade, to frame a narrative, to frame a bias, right? So again, if you're reading price on the 3-minute time frame, okay, the signatures that I look for remain the same. Okay, I like the 1 minute chart because I feel like I can see the signatures clearly. I feel like I've grown to be comfortable with how the markets, specifically NASDAQ and the S&P 500, act on the 1 minute time frame during macros, after hitting key levels, etc., etc., etc. I'm sure if I was to spend my entire ICT learning on the 3-minute chart, I would be coming up with more models, more ways to incorporate signatures into a narrative just on a different time frame, because price is fractal, price is price. Okay, but for all my trades, right, I'm on the 1 minute time frame. Okay, all of that out of the way. What did we have today? 8:30 news release. Now, just looking at this chart, someone tell me in chat, right? Why is it reasonable? Why is it okay? Why is it, I'll call it not foolish, not wrong, I'll say, right? Because we can never be 100% right in our trading and our bias in our predictions with the market, where it's going to go today, this month, next month, this year, etc. But someone tell me in chat, why is it reasonable after this 8:30 news release to expect a potential recovery to buy side before we get into everything else, based on what I have in the charts right here? Someone tell me. Then we'll walk through signatures, we'll walk through the order flow and kind of the roadmap to how we got to London High. And take your time. All correct answers so far. I'll give it another couple seconds. And don't be shy, guys. If you're incorrect, no one's going to give you a hard time. It's part of the learning here. Okay. We have AMD, right? That is correct. You can see here, and you guys were probably watching the market before this 8:30 release, right? We had a lot of consolidation up there, and then we dropped, right? And then, of course, in hindsight, we returned higher to that liquidity pool. So that is accumulation, manipulation, and then distribution back above, okay? Relative equal highs, because lows were taken, correct, right? So we're going into what? Upon 8:30 news, someone tell me this, and a couple of these are going to be fairly easy, straightforward questions, but this is what I'm thinking to myself as I'm reading the market. So I kind of just want to talk about how I'm reading these candlesticks, okay? Essentially, on the 8:30 news release, is there any manipulation to the upside? Is there any move at all where I have that 8:30 candle? Right. There's zero buy side delivery there. We just dropped, I forget what it was, like 140 points, which was insane to watch in like probably about 10 seconds, I believe. Okay. That in and of itself, right? There was no buy side delivery. And we know the majority of the wicks, even looking at this 1 minute chart, 99% of them have a wick on both sides. Even if it's a short stubby wick, there's still a wick there. Or in other words, there's still a manipulation. Okay. More importantly, with that 8:30 news release, see how close we came to London high? Did we purge London high? Or was there a clear purge of buy side liquidity with that 8:30 news release? Yes or no? Correct. And Ross, I know you. Ross is the London high king. The RTO guys know that. Right. So the way I'm internalizing this, right, looking at London high and just this 8:30 news release, once I see this aggressive drop, and we're going to discuss what happens down here, okay, this is just engineered buy side liquidity, okay, and I won't really get into the higher time frames, but essentially it's reasonable for what you guys know and what we've kind of been watching to expect higher prices. I'm specifically referring to the daily BPRs on both NASDAQ and ES. We've been watching as long as we remain above those on a closing basis, okay, I'll expect higher prices. That's kind of my fulcrum point. I'll share a chart of that after for the entirety of the server, or if you don't know what I'm talking about. But I'm on the daily chart, and there's two BPRs that were in close proximity of price. We've kind of expanded away from them to a deeper premium, to buy side liquidity, to premium inefficiencies, etc. Okay, but I'll share those charts after. Okay, so again, higher time frame, it's reasonable to expect bullish price action or a premium draw on liquidity. Okay, and then for this intraday session and this lower time frame here, we see that they're engineering buy side liquidity. Okay, now a couple of you said sell side liquidity purge. Correct. But why is this sell side important? Someone tell me. It's a daily low. In other words, a session low, utilizing that logic from the one setup for life. Okay. On top of that, what is this session low, last Friday's low, resting right above? Daily inversion high. That's a higher time frame inefficiency. Okay. So without even looking at where this last Friday's low was formed, just knowing that there's engineered buy side liquidity, a session low, more specifically a daily low, right above a higher time frame inefficiency, what does this tell you about when this low was formed? It was engineered sell side liquidity. And what are they doing? They're leaving the engineered buy side liquidity when it's reasonable to have a bullish bias on the higher time frames. Everyone following along? So no manipulation at 8:30 news. They bring it just short of London high. Okay, so we have relative equal highs up here. We run a session low, opposing liquidity, okay, into a higher time frame inefficiency. Okay, guys? Everyone good before we move on? And I saw a few of you guys join late. Welcome, and this is being recorded if you want to review the early portion. You didn't miss much. Okay, cool. So let's go to the next chart. So essentially, obviously, in hindsight, we can see that we did reverse and beautifully get the London high on the top right of your screen here on my chart that I'm sharing, 18,307.50. We did, of course, get that level. Okay. We understand that, or I'll say this, I'll ask it as a question to keep it more interactive. It's labeled, but Why is that large SIBI higher significance than a normal SIBI that forms during the day? Not on the fact that by it's huge. I'm not trying to emphasize that. I'm just trying to go step by step with the logic. Right, Ross? It's the news fair value gap. So how did we know that we weren't just going to come back up into that news fair value gap and leave the highs for the afternoon, for tomorrow, for London session, I guess this tomorrow night, this morning, wherever you are, right? Or for next week, right? How did we reasonably expect us to dig into a deeper premium in relation to that news fair value gap? What tool do we use for that? For news fair value gaps, large fair value gaps on the higher time frames, significant inefficiencies, right? Fib. There you go, Adam. Adam and GK, that's what I was looking for. Smart money handshaking. Okay, if you are new to the server or haven't seen my teaching on smart money handshaking, that is on my YouTube channel. I believe it's actually just called ICT Concepts Smart Money Handshaking. Okay, I could be mistaken, but I believe that's what it is. Of course, just search it on YouTube if you want to watch it, or it's if you go to the socials category in this server and go to my YouTube, you should scroll up and see it a bit ago. Okay, but essentially we want to use smart money handshaking to find these hidden signatures to see if it's reasonable to us for us to expect us to deliver to just the 25% of this SIBI here, this news fair value gap, or the 50%, or the 75%, or the high, or how do we know it was going to become an inversion fair value gap before we even got to the high and closed above? Okay. So essentially, what do you guys think these blue lines are? What did I put on here? Are those the quadrants? And I tweeted this out today too. And I hope some of you guys kind of dug into this, because that will make this a little more beneficial too, because you'll be a little more prepared. Of course, we're still going to walk through it, but right. So these are the 8th levels. So I saw someone on Twitter. Again, if you are here, I apologize. I forget the name, but I saw someone ask me, why not the 16th levels? Okay. That is perfectly fine if you're using the 16th levels here. Okay. The 8th levels were enough for me to see what was occurring here, and we're going to walk through it. Okay. Especially since we had this enormous 1-minute SIBI, the 16th levels were completely valid here. Okay. I typically utilize the 16th levels if we have like a large weekly or daily, sometimes 4-hour, right? If we have large expansion, but those higher time frame, large inefficiencies, then I'll really look at the 16th levels. But here, right on the 8th levels, it was enough for me to see what was occurring as we continue to discuss kind of how I internalize this order flow and frame my long setups. Okay, so again, we want to study how price acted in relation to these 8th levels, the quadrants, right? So on and so forth, eventually to the high, and of course, eventually to our terminus, London high, for this particular fractal of price. Okay. Someone tell me here, we're going to keep this interactive. And again, some of these signatures will be difficult, so don't feel afraid to answer and take a stab at it. Why is this order block classified as high probability order block? There's 2 signatures I added. I added the order block, and what else did I add there? What's that little line I added? What's that purple line I added right there? Immediate rebalance. So again, we're walking through this step by step. So we already know what we purged a session low. We're seeing aggressive rejection on a wick up basis from a higher time frame inefficiency when we know we have engineered buy side liquidity above, and we know that the higher time frame has been bullish. Okay, again, going back to the daily BPRs, that's how I've been reading it. As long as we're above that, I'll favor long setups. That doesn't mean I won't take short scalps during the day, but I'll favor long setups for the most part, and I'll have more confidence in those long setups playing out and reaching for my targets. Okay, so a couple things here, right? We come up and we test this. Look at where my cursor is. We're testing the 25% level of the news fair value gap. That is this blue line where we're wicking into here. Now, This right here, this immediate rebalance, look at the high of where I have the purple line there, anchored on the left. Where is that high also residing? Look where my cursor is. What am I telling you? Right here. Right. Good job, guys. 25% or the lower quadrant of the news fair value gap. Now, think about this logic kind of in a reverse manner, right? This is what I typically do. If I'm looking for a long, I want to ask myself, what do I want to see if I was looking for a short? And then, of course, I want to see those bearish signatures fail. So right away, after we come up into this, and we're at 25% of this SIBI, we're testing it, right? We failed to close above it here. You guys know smart money handshaking is closing above an inefficiency, right? And then coming back down to a discount and then going higher, or not an inefficiency, excuse me. An 8th level, a quadrant, a 16th level, okay? But essentially here, we're closing above an 8th level, the first 8th, but we're rejecting off of the 25%, okay? Using that kind of reverse logic, if we were looking for a short, a high probability short, where we had everything moving in our direction, all the confidence, all these signatures telling us it's going lower, yes or no? Do we want to see a bullish immediate rebalance at 25% of a news fair value gap, a significant inefficiency? Do we want to see a successful bullish immediate rebalance at 25% of a bearish, right, fair value gap? No, we don't, right? We want to see, if this does come to fruition, we want to see us expand up, and then we want to see it immediately fail. Does it do that? No. We're wicking in and getting that immediate rebalance, but where else are we going into? That order block, okay? Below this order block, where's the inefficiency? Someone tell me, from this low all the way down here, all the way up to the low of the order block, where's the inefficiency? Someone tell me. Correct. There's no inefficiency. So on top of the bullish immediate rebalance here, no fair value gap, no even volume imbalance down here. If there was, you'd want to see it remain open, first of all. That is on the breakaway gap video on my YouTube channel, or RTO guys in the foundations. I believe it's lesson 4 in there, okay? But there's not even a volume imbalance down here. There's not even a tiny fair value gap down here, right? We don't want to see us go below this. And look at this reaction. Immediate rebalance. We know how strong that signature is when it fits our narrative, okay? And the main thing here, guys, again, I know we're going to discuss these signatures we're talking about now, and we're going to continue to discuss, and it's beautiful, okay? And I use it in my trading every single day, right? But the main thing is that we have what? Engineered buy-side liquidity, clear as day above, saying, come get me, I'm up here, right? And we've purged clear opposing session liquidity into a higher time frame inefficiency, okay? After those two things are completed, then we start to hunt the lower time frame signatures. We use the signatures we see, we look for time, we look for what the macro is doing, how we're internalizing that, okay? So again, the main thing is that we have these highs here, London high, and again, last Friday high is not charted on here, so it's even more buy-side liquidity, okay? So as we start to see this immediate rebalance and this initial reaction or displacement away from this order block, that's confirmation that we're going to the highs. We're going to continue to explain why, but that's confirmation. Someone tell me, if we're looking for lower prices, do we want to see a down close candle support price in general, in layman's terms? Simple, right? No. We don't want to see that occur. And then add what we just discussed with this immediate rebalance. We don't want to see that occur, okay? So let's say we were looking for a short off this again, okay? We're seeing all these bullish signatures come to fruition just off this little fractal price. I've spent about what? I don't know, 5-10 minutes talking about these 1, 2, 3, 4, 5, 6, about 6 or 7 minute candles, 1 minute candles, right? Just how much that aids in my bias, in my internalization of order flow, okay? So again, this order block, and more specifically, the immediate rebalance and displacement away from that down close candle, I'm looking at that the same way I look at how you might internalize a change in the state of delivery, right? How we had this initial sell side dump, And then right after that, we see this occur on top of what we already discussed. Okay. So now everyone clear? Any questions on this before I go next? I want to make sure everyone's following along. Okay, cool. When would the immediate rebounds be negated for me? What's the rule of thumb with immediate rebounds? Someone tell me. Oh, my bad, Sil. I saw your question. 1 second. What's the rule of thumb for immediate rebounds? Must expand away. And how many candles do we look for? There you go, Adam. We're giving it 2 candles after the immediate rebound signature. So essentially 3 candles total. When it comes down into the wick, best case, it does what it did here. See how we have this wick up, the second candle, and then instead of forming a fair value gap here, we're coming into that first candle's upper wick, right? This is best case. We displaced there. Let's say we chopped around here, kind of had that 1 minute doji looking candle. On the second and third candle, we'd want to see that expansion to confirm that it is I'll call it a true bullish immediate rebalance, right? So Glenn, right? Let's say right after we see the signature, we chop around for those 2 following candles, or we roll over. That would be confirmation that it's likely that we're going to dig through this order block, right, and reach for lower prices, or just have to wait and maybe consolidate and then see what price gives us and how it trades if it comes back up and tests the new fair value gap. It might just not be time yet, okay? Even if we already go to the highs yet. If we start to see that immediate rebalance fail there, okay, on top of this order block, it might just not be time yet. It doesn't necessarily mean we're just going to automatically dump to the lows. We might just have to have some consolidation, some time distortion, specifically because this was before 9:30 opening bell as well. Okay. So again, why is this a high probability order block? Because we had this immediate rebound signature right here. It's after we purge this low, okay, the session low, after we deliver from a higher time frame inefficiency, okay, and it's after we close above that 16th level. I feel like I just said that, I forget, but it's also we close above that 16th level, okay, and then we reach and have the immediate rebounds in the upper half. And again, in relation to this order block, what did price fail to reach for in relation to the order block during this whole fractal, even right after with this immediate rebalance? You're going to have to use your eye test here in relation to the order block. Right, mean threshold, 50% of the order block, right? It's allowed to wick there, but if it doesn't even want to wick to mean threshold of an order block on top of everything we've discussed, that's further confluence. So see how much we're spending on this, what did I say, 6-7 minutes of price here? See how much we can gauge from this? Okay, so all that being said, again, if you're feeling overwhelmed, it's just going to come with experience and really digging into your charts and your reviews, right? Allowing yourselves to make mistakes, okay? Not getting too down on yourself after a loss, not getting too up on yourself after a win, right? The trade I had was beautiful today, right? I'm not going to lie, after a couple minutes, I was pretty excited, but you can't let that roll over. That has to end quick, right? Pat yourself on the back and move forward. Or don't have the victim mentality when you take a loss and feel bad for yourself. No one's coming to save you. You just have to move on and learn from it, okay? So again, I could harp on this little price action, and we're going to continue forward. And there's so many things, and it's beautiful. You guys can probably tell I'm a little nerd about this stuff, right? But it's really eye-opening, and to some degree, you've probably heard ICT say this before, okay? But it feels like almost you shouldn't know it. It's a strange feeling, okay? So let's move on to our next slide here, okay? Someone tell me why this was a high probability BISI to support price. Someone take a stab at it. There's a couple answers I'm looking for here. Yeah, Adam, we'll We'll get to there, but good eye, yeah. So essentially, right, how do I want to walk through this? All of your answers are, I love. So let's stick with the smart money handshaking, internalization of order flow first. Okay. And yes, it's a good signature. That price did not close below CE of this BISI here, right? See how it's respecting the midpoint? And I'm sure a lot of you are going to be looking on your charts and saying, wait, I have a different CE. It looks like we closed below CE of this BISI here. But you have to look, it's kind of hard to see here because I have my anchors there. But if you look at this candle, there's a little volume imbalance right under this purple line here. If that volume imbalance is included in the 3-candle fair value gap formation, I'm utilizing that volume imbalance, to get my correct anchoring, to see signatures like this, to see if the bodies are truly respecting or disrespecting CE of what I'm deeming and classifying as a high probability BISI. Okay, so essentially, if we have an order block below, right, and we've already had this immediate rebalance that created this displacement, this is high probability in and of itself for me. On top of this, right, going back, we're reading price the same way. We're just internalizing these signatures, right? We've already discussed there's no inefficiencies down here. So this BISI here is the only inefficiency above what we can deem as a balanced price range, a high probability order block. We've already had the immediate rebalance signature. So do we want to see us go back below there? Someone tell me yes or no. If we're looking for strength, speed, signatures of strength to confirm that we are on side if we're in a long, do we want to see an immediate rebalance just send us up 5 points and then fail right away? No. Correct. Okay. On top of this, with the smart money handshaking, what are we doing? And again, refer to the lines on the right. I try to keep it as organized as possible because we're going to have a lot of lipstick on here. Okay. What occurs, see this up close candle right below my arrow, my cursor? What is occurring there? Look at the right side. What level is that? I'll put my cursor over here. What are we closing above? Remember, these 8th levels are measuring the news fair value gap, a significant inefficiency. Right, Trader Mo. Right, GK. Right, we're closing above 50%. Going back to that 25% level, do we want to see a successful bullish immediate rebalance at 25% of a significant inefficiency if we're looking for a short? No. Same thing here. Do we want to see us initially get support off of this BISI that completes a buy side objective for us? What do I mean by that? What's the buy side objective? Someone tell me before I explain it. We already said it, but I want to make sure. I'll probably use that language in future videos, right, in future calls. What is the completed objective with this 1 minute candle? We already said it, but just I want to make sure everyone gets that language, that terminology. Right. The objective that the smart money handshaking in and of itself is that we're closing above this 50% level, right? Using that reverse bias thinking, right? We don't want to see a close above 50% of a fair value gap in general, but especially not a news fair value gap, right? And we go after immediate rebalance, we go right up there and close above it, okay? What do we do after we close above it? We refer to a discount high probability BISI. Is everyone understanding this? Is everyone seeing this? We're digging up. All the high frequency trading algorithms, they're coded for things like this. Closure above these levels. Once it refers to a discount inefficiency, buy, buy, buy. Every time we come into this, they're buying this. They're buying this on the order block, right? Especially since this is a news fair value gap, right? It needs time and price. The price is the inefficiency in and of itself, the 8th levels. But why is time a factor? Because, first of all, we'll get into the macro, but It's the first inefficiency after the 8:30 news release. So we're utilizing it the same way we utilize the 9:30 fair value gap trading model. Is that making sense? So this 1 minute candle is telling those high frequency trading algorithms, buy, it's going higher. Right? Does that mean every time you see this, every single dip, I buy this? Does that mean I bought 5,000 contracts on every single one of these? No. What did I say at the start of the call? Risk management, patience, discipline, responsibility, all come before any of these signatures. Okay? But we see that beautifully here. Then what do? Right? This is when, who said it? Bugzilla. Right. Someone else say it too. Bugzilla. Ellie said it as well. Good job. Right? We're never closing below 50% of this high probability BISI. So the wicks do the damage, but what do the bodies do? Someone tell me. What do the bodies do? What does ICT say? The bodies are telling the story, right? So we're allowing for this wick lower, right? Let's say this wick came down into this order block. This would have been a great buy, right? If it did allow me to get this, it would have. But best case scenario, internalizing order flow, we don't want to see. And look what it does. It comes right to the low of this, fails to get to the immediate rebalance, the volume imbalance, and reach the order block. Remember, we already failed to get to mean threshold, so we want to see that remain untouched. But if it did come down real quick, you want to still see the bodies respect that CE and expand away from that. Just kind of a side note there. But after we have that smart money handshaking with a 50% level of the news fair value gap, we return to this discount, right? This high probability discount inefficiency. Then what do? What are we doing here? Someone tell me right here. What objective did we complete here with this up close candle that's below my cursor? See how we're climbing the ladder? What occurred there? Right climb. We closed above what? Right at him. The next 8th level. Right? What do we do after we close above the next 8th level? We return to what? A random inefficiency? No. The high probability BISI. Did these lows get taken out? No. Did the bodies respect this still? Let's count how many times it tested CE. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. It's telling you it's not going lower. So when you look and see these equal lows, you're saying, okay, it's likely that they're going to leave those for later based on what we just discussed and what I'm about to discuss. And I believe the next slide or the following slide. Okay. But do you guys see this logic at play again? Right? We come up and I believe we run this high slightly. Okay. But let's say it's equal highs. But for this, let's pretend that we did purge this. I think we did. I don't have the specific level there. But even if we purge that high, how do you know it's not just a buy stop liquidity sweep and then we're going lower? Because of the smart money handshaking and going back all the way to how we framed this fractal of price, this move. All the clear as day engineered buy side liquidity, and we already purged these lows. So now we're just internalizing these signatures and looking for the algorithmic footprints. Okay, everyone following along? And again, my moves that I catch and just the way I reprice, I'm not looking into it. I'm not using smart money handshaking every single one of my trades. Right? I'm not using I don't require high probability BISIs and high probability order blocks and macro inversions and macro BPRs and smart money handshaking with news fair value gaps, all these things in each one of my trades. They're just tools that you go into your toolkit whenever the market presents them. Because I didn't know what 8:30 news was going to do. I didn't know that it was going to leave the highs when it was, about 8 points close to it. You don't know those things. Right? But your ability to internalize this order flow and to go into, using that same analogy, go into your toolkit whenever the market presents itself, that's when you pull it. Okay, macro BPR, it fits my narrative. I can frame risk. Boom, macro BPR is the entry today, right? Or today, it was a high probability order block. I mentioned a bit ago at the earlier portions of this call. Early on my journey with ICT, I never use order blocks to enter. Now I use them all the time. because I'm comfortable and I can read them. I can responsibly frame risk and trades and narrative off of them when they fit the profile of the intraday session. Okay, so before I move on, actually I believe, let me see, hopefully I don't mess this up. All right, we're good. Right, so what is this? Sell side delivery, buy side delivery. Does everyone see that BPR before I move on? Okay. Right, Ross. BPRs are amazing. Make them your best friend, regardless of time frame. As I kind of spent some time discussing in the start of the call, I execute in the 1 minute. I spend the majority of my time here. Right. Of course, I look at the higher time frames and stuff, identify liquidity pools, key levels, etc. But when I'm executing, I can see these BPRs beautifully. But you can say, okay, well, there's BPRs everywhere, or maybe not on this fractal price, but you need to be able to identify high probability BPRs. Okay, so before I go to the next slide, we discussed why these lows are likely to be left untouched, right? Leave those equal lows until we meet the buy side objective at least, okay? Because of the high probability BISI, because of the smart money handshaking, okay? Everything we already discussed up to this point. But now, after we close above right here, okay, why is it even higher confidence that these are going to be left? With the up close candle below my cursor, someone tell me. RTO guys, what does a BPR act as? What do we call it? Actually, it's on my YouTube channel too, so. Inversions as well. I'm thinking of that terminology. Right, Adam, smoke screen. So if price does what? Price is going to balance out or go sweep liquidity. We've already swept liquidity down here, and we've had what? Even on this 1 minute time frame, we've had these signatures respecting CE of this high probability BISI that we expect it to be a high probability BISI, right? And then we have sell side delivery, buy side delivery. Again, guys, this is how I reprice. If I was in a short here, do I want to see us close above this SIBI? No, because I know, right? I know that would become a balanced price range. Now, after we create this BPR, does price return to the BPR? No. That's exactly what we want to see, right? Is price allowed to reach for that BPR? Yes, price is allowed to reach there. So let's say you weren't entered in a trade before, off this order block, off the BISI, off the immediate rebalance, whatever. Let's say you were still hunting longs, you had a bullish bias, and you're understanding that the clear as day buy side liquidity pool is still there as a target, okay? You see this BPR come to fruition. Many times, unless it really gaps up, right, I'll just market buy and just open myself up to another couple points of risk, right? But again, my stop loss is, of course, allowing for that wick down, because sometimes, and really what I want to see majority of the time, we won't wick into this BPR, okay? And I believe I've said this before, but just internalizing order flow, if we're not returning to a BPR or an inversion fair value gap, that is, when we're bullish, a signature of extreme strength, okay? And I'll kind of just leave that for you to study in your charts and kind of watch throughout the rest of the week. Okay, and everything I'm saying, of course, just flip when we are bearish. Okay. Okay, so before I go to the next slide, someone tell me why this BPR was significant as well. Look at the bottom of the screen. What's right below my cursor? Bingo. Bingo, bingo, bingo. Yes, Ross. Yes, GK. Yes, Mello. Yes, Mito. Yes. It's the 850 macro. So what's occurring here? The BPR in and of itself is high probability because it's on the top of this high probability BISI. See how we're just climbing the ladder with these 1, 2, and now 3 PD arrays, and we're also utilizing the smart money handshaking to see what's going on, right? But why is this even higher probability? It's a macro BPR, right? In other words, in simple terms, time is meeting price. Okay. RTO guys, when we switch to just the RTO section of the call, the kind of workshop, we'll look at it. But you also want to note here your MO, okay, for the 850 macro. Okay. So we're seeing in and of itself, right? Like I said, if you don't or didn't enter before this and you're looking for this entry, this is still completely valid. And again, you can expect these lows to remain untouched, okay, until we at least reach the buy side objective here, right? And this is still, it doesn't look like a large move because this was such large expansion, but this was probably still what? This is 40 points, right? 40, 45 points, something like that, okay? Now let's continue forward and see how we continue to deliver through the high of this news fair value gap into the London high. Before I go on, does anyone else have any other questions? We're still good? You guys having fun? We haven't done a big stream like this with everyone in a bit, so I'm happy to be back on. You guys can probably tell because I'm just yapping away. Okay, cool. All right. So we're zoomed in. Of course, we're still looking at the same fractal of price and how we deliver to that London high target at 18,308.75. Okay. This is the BPR we just discussed. Okay. We come up to here, right? What is occurring here? Very slightly, we're closing above that final 8th level. And then what are we doing, right? We're chopping around before what? 930 open, and this is your 930 fair value gap. Okay. So a couple things. Why would you, it's not the worst setup right at 930 when we come down into this 930 fair value gap here. This is not the worst long setup, but it's also not the best, and I'll explain why, right? Someone tell me why it's not the best idea to go long right here. This is what? At 932 on this first dip down in this doji looking candle into the 930 fair value gap. Why do you want to be a little cautious of longs here, right? Let's say you're just entering a trade here, not to kill the trade based off what we've discussed from where we enter on the order block. Not necessarily, so correct, right? But essentially, right, I don't want price to go all the way back to discount. I don't want price to go all the way back down to this order block, right? I don't care that it's in a premium. I'm expecting it to go up here. I'm looking for signatures up here, right? There you go. That's what I'm looking for, 3-eyed raven. Because one, right, has there, yes, we sweep this low, but after 930 open, was there any manipulation below 930 opening price on this first wick down into there? No, there wasn't. On top of this, look what we just did. We just took out this internal high. So especially, right, so this actually goes back to Bo Jiden. I find that name funny every single time. Yes, we're in a premium, right? So we do want to require a bit more if we're entering in a premium here, right? Since we still have the clear as day London buy side liquidity, right? We want to wait for setups like this where we have clear manipulation, okay? Below the swing low, below 930 opening price, okay? On the flip side of this, after we close below this 930 fair value gap, guys, why do you want to be hesitant to short this? And I promise we're getting somewhere. Why do you want to be hesitant to short this? There's one other thing that's going to be on the next slide that's not here, but focus on what we've discussed. Why is this not the best 930 fair value gap short? Yes, we have these equal lows here, but what did we already discuss? Do we want to see those taken out? No. What are we doing here? We just purged internal sell side liquidity. We're below 930 opening price, right? And more importantly, What is our entire bias and narrative for this whole fractal we've been discussing for this entire call? Bullish. This is the draw on liquidity. That is number one. Right? So this is a good example of what we've kind of been discussing. I mentioned a couple times in this call, specifically, and in previous calls with RTO guys, right? As long as we're above those daily BPRs on NASDAQ and ES, I will favor longs. And this is a great example of that. We had equal highs up here and we have equal lows down here. In and of itself, the higher time frame bias, right? The narrative, right? It's more likely to reach for those opposed to this. Okay. On top of course, everything we've already discussed. And now this here. Okay. You guys see this? Did anyone see this morning? So we have this BPR below, right? Do we want to see price get back down there? No, we already discussed. We do not want to see price get back down there. What's above it? This inversion. See right here on this down close candle? See how we slightly wicked up into it? Right? It was utilized on this small sell-off to do what? Deliver us to this CE of the high probability BISI that we've been discussing. We spent so much time on all of this stuff. So see how we're climbing the ladder here? You guys see that? See why macros are so important. Right? And see how I'm placing my emphasis on this 850 macro inversion, right? Opposed to, you guys see this BISI right here? It's not charted. You guys see this BISI right here? Everyone see this right here? Does everyone see this? Cool. This BISI right here, we closed below it. How did we know we weren't going to inverse that and go lower? Right? Because going back to it, first and foremost, the bias, the draw on liquidity is to the highs, right? Second of all, this is an 850 macro inversion. So it's a high probability discount or bullish PD array that the algorithm is going into when the bias is bullish. And everything below that is balanced. You guys understand that? What's right below this 850 macro inversion? The BPR. What did we already discussed like 5 times now? We don't want to see price return down there. It's likely, and it did pan out beautifully, that they were going to leave these lows. Okay, we already had the immediate rebound bounce. We don't want to see us go below there. All these signatures that we've been discussing. Okay, so my priorities on this 850 macro bullish inversion, this orange rectangle you see coming across your screen. Okay, instead of this inefficiency or this little inefficiency here, right? This is why you need high probability inefficiencies. This is why you need macro inversions in this example. Because how did I know not to just short this little BISI here or short the next one, right? Or let's see, right? Or short this little one here when we came back up into it, right? Any of the 1 minute PD arrays for that matter, not just inversions. How do we know which ones to take and which not to take? We place the emphasis on all the ways we've been internalizing price here, but the macros more importantly, because it helps us get rid of all of the noise, right? And yes, there is noise. If you're trying to trade just the 2022 model, just for pattern's sake, right, you're going to get fooled a million times, right? This is a sweep of a high. This is a break of a swing low. This is a return to this SIBI here. Why didn't that work? You would have taken a loss there. Your stop would have been above this high. You would have been going for these equal lows, right? It comes with time. It comes with reading price, okay? So we're running this sell side liquidity below 930 fair value gap, or excuse me, below 930 open, right? Into a high probability discount bullish inefficiency. And on top of this, guys, what did I mention at the start of this? How do we know that this news fair value gap was going to become an inversion, a bullish inversion, when we were right here at this order block, right? How did we know it was going to become a bullish inversion fair value gap? On on top of all the smart money handshake we've discussed. But if we're expecting the news fair value gap to become a bullish inversion fair value gap before we close above the entirety of it, what is a signature we want to see from a bullish fair value gap? Or excuse me, bullish inversion fair value gap in relation to CE? Someone tell me. Best case, do we deliver to consequent encroachment? Yes or no? Of a bullish fair value gap inversion. Sorry, I keep saying that. Do we want to see price deliver to CE of a bullish inversion? Correct. We do not. What is price failing to do right here? Look on the right. That's 50% of the news fair value gap. So we're seeing the bullish signature from this news fair value gap before it even closes above. Do you guys see that? There's literally signatures everywhere in this little fractal of price. Right? And again, if this is overwhelming, use it to motivate you. Right? Use it to inspire you to dig deeper. Right? And just think about how much better you're going to be as a trader as just internalizing price action 6 months from now, a year from now, 3 years from now, 5 years from now, 10 years from now, because that's the goal. You want to have a career in this. You don't just want to gamble and get lucky for 3 months and then lose it all. You're better off just going to the casino if you're going to do that. Right? You're trying to focus on the skill set and find recurring signatures, repeatable things that occur in price every single day. Right? That you can say, okay, I don't need to risk my whole account on this because I know how often they present themselves. Is it the best setup? No. I know there's going to be a great setup later today or tomorrow. So I'm just going to wait. Right? You're demanding, you deserve a better setup. Right? And this, I won't go on a little psychology rant here, but once you start to read your price this way and you gain confidence in your ability to read price action, right? You're really going to be in no rush to enter. And the only thing standing in the way from you and profitability, you and the results you're looking for, whether it's just to help pay some of your bills or pay for your children, go out to dinner once a week, or buy a new house, retire your parents, buy a new car, right? You're the only thing standing in your way, right? Every time you want to do, frankly, some dumb shit in the market and just say, okay, let me just push that one extra contract when you know you shouldn't, even if it turns out to be a winner, it's just building up those bad habits until you finally crash and burn. That one day where you fall back and you take one loss and you just can't handle it because your ego is hurt, right? Even if the way I've been describing, I guess you can say passionately about this fractal here and how I kind of generally talk about price action because I love this stuff, right? Even with how beautiful this stuff is, you don't over leverage, because guess what? There's going to be a time where me, you, everyone in here is going to feel so confident in reading price action. We're going to see a macro BPR at some point, and guess what? We're going to think it's going to go up, and we're going to be wrong. It's going to go down. That goes all the way back to the start of the call. What is the most important thing? Risk management, right? Being responsible, being disciplined, right? So no matter how good a setup looks, we're not immature. We're not in the freaking casino. Okay? So again, these things are beautiful, but at the end of the day, we need to be able to manage ourselves. And you guys can already tell I'm going on a rant about this stuff because I know how difficult it is, right? You never truly master it. You can still feel the itch to put on that extra 2 contracts, 3 contracts, to take three trades, to break your rules when you have 2 max trade rules, to take that third trade with triple the amount of leverage because you're 0 for 2 for the day. And you can't sit with it over the weekend because it's a Friday and you gave all your profit back. Okay? You just remove yourself and I'll say take the pressure off the moment. Okay? We'll do this. You guys can tell I'm already ranting. So we'll finish up this, how we're reading price. Okay? But essentially, right? We wanted to be hesitant, okay, on the short after we close below the 930 fair value gap because we've already had a sell side liquidity sweep below 930 opening price, right? We've already had delivery, and what do we see here? And I failed to mention this. but this should go without saying at this point, right? What signatures are we seeing from this macro inversion after we deliver to it, excuse me? The bodies are respecting it. We're failing to get to the low of the inversion. We're failing to reach 50% of the news fair value gap. Remember, we're essentially time travelers here, as ICT says, right? We're seeing these bullish signatures. So after we see failure to get to the inversion low, body respect on this large down close candle, right? And then as price comes aggressively back up into this 930, what you're classifying it in terms of just pure price pattern, this 930 inversion fair value gap, you know that this is a low probability short. Okay. On top of this, after we close back above it, what do we expect? It to go right up there to our target. Why? The 930 reclaimed fair value gap. It should be balanced now. Do we want to see it reach the low? No. Does it reach the low? No. Right? We initially had buy side delivery when it was formed. We displaced aggressively through it, and then we recovered aggressively back above it. So it's balanced, right? So it should not go back below. So let's say you weren't in a long here. Let's say your rules are you can only trade after 930. Fine. This little fractal of price, what occurred here, you can still validate a long right here on this retracement into the 930 reclaimed fair value gap to that London high. Okay, that's about what? Almost 30 points there, 27 points, 28 points. Okay, and if it's a BPR, what is the signature we want to see from BPR? Just like we were discussing back here. Do we want to see price reach the low of BPR? No. Best case, do we want to see it reach 50%? No. What is it doing here? Institutional order flow entry drill, breakaway gap, speed, whatever you want to call it. This is when you expect that delivery, okay? On top of this, to wrap it all together, guys, before I don't even know, I'm just speaking a ton, right? Why is this a high probability order block? Okay. The opening price of the order block is this blue line dragged across here, right? Where is the inefficiency below there, guys? We're just looking for liquidity and inefficiency. We've already had a liquidity sweep right here. We've already established that we don't want to see price go below, excuse me, this 850 macro inversion. So by extension, this low is safe. The 930 fair value gap should be balanced. Do we want to see go to the low? Where is the other inefficiency? There is none. If it doesn't just run, which best case it does, if right here it doesn't just run in there, any retracement into this order block is high probability, and it's just offering smart money the opportunity to get long one last time, or in this case, 1, 2, 3, 4, these 4 last wicks into there, right? Okay. And on top of the way we internalize price in relation to this initial high probability order block back here, guys, right? Does price reach mean threshold of this order block? No. Why is that to be expected? What's it overlapping with? The 930 reclaimed fair value gap, which we can classify as balanced, right? Mean thresholds below the high of that reclaimed fair value gap. Okay, so this is where you can be a bit more aggressive with your stop, especially when we're right after news and we're closer to 930 opening price here, and we have a little more coloring outside of the lines. When you see this beautiful delivery, right, you can trail it fairly tight here because we'll have larger swings. Okay, and recall we had Powell speaking at 10, right? Okay, so again, guys, just beautiful delivery today. As always, I know I've said it a couple times here, and I promise I won't rant your ears off. I can't emphasize enough, and I know you guys all know this. Deep down, we know this, but we know how hard it is to stay present, right? Even after you're motivated watching this, or you dig into your own charts, or as you gain confidence your ability to trade or just internalize price action, internalize order flow, right? You need to just always remain level-headed, right? You can't get too high on the highs, too low on the lows. That's really anything in life, but specifically trading, because these markets will literally destroy you, right? I'm pretty sure we've all been through it to some degree, some worse than others. And kudos to you and everyone in here for continuing to come back and not really quitting, right? You're not going to fail unless you hang up the cleats and really quit, right? But you're not going to make your progress until you master yourself, right? Again, to kind of wrap it up here, you got to dig into your bad habits. You got to understand when you're in the right frame of mind. When are you more likely to go into to tilt, right? Did you not sleep well? Are you dealing with something outside the charts and you want to go prove yourself that you can make a shit ton of money, right? And that you're worth something, right? All of these things are things that each one of us deals in a different way. And you need to understand why you feel that way. And I know it's cliche and I know it's corny, but I promise you, every profitable trader has done that to some degree, right? If these traders who have not done that, or you see people online saying that's stupid or dumb, I promise you that they are not profitable, right? I guarantee you, okay? And that's no hate against them or anything, but it's just me stressing and emphasizing the importance of that phase in your journey as a trader. And it's not just like you do it for one day and it's done, right? This is a long career you're trying to sustain, right? Base hits, learning, right? Again, proper risk management to keep you in this game long enough until you have that profitable system, that profitable model. So that was a good call. I had fun. I hope you guys had fun. How long has it been? A little over an hour. So I recorded this. I'll render it out. It will be in the market review category under, under the daily review channel. Okay, I'll ping it as well. I'll add everyone. Okay, I am going to hop in the RTO live with the RTO team now. We're going to do a bit of a workshop there. We won't spend too much time because I didn't think I would be on here for this long, but I guess this is how ICT feels when he just goes on a rant. Except he talks about aliens and I talk about price. All right. All right, guys, take it easy. If you have any questions or any thoughts about the live, any suggestions, let me know on Twitter, right? Or let me know in chat. All right, see you guys.